Hi, I'm Pattu from freefincal. After the market crash, 80% of active large cap funds have outperformed the Nifty and the Nifty 100 over the last 1 year trailing period with respect to May 15th, 2020. What does this mean? So, I've been saying this for quite a while now. From 1st February 2018, there has been a big inhomogeneity in the market. Few stocks in the Nifty dragged the Nifty up while the rest of the stocks in the Nifty kept moving down. The red line you see there is the Nifty 50 equal weight index, and the blue line is the Nifty 100. And you can see the how they break away with respect to the first February 2018. That's the budget day. And I'd made this point in my recent market outlook video. And like I said yesterday in the market valuation video, the Nifty index was so overvalued that even after the crash, it looks as if it has barely not even crashed at all. So along with this, the Nifty Next 50 also fell down since February 2018. The mid cap and the small caps also fell down. And so what happened was that probably for the first time, at least to my knowledge, prominently the active large cap funds started underperforming relatively with respect to the Nifty and the Sensex index funds, Nifty 100 indexes and so on. In fact, the index fund started getting a higher star rating than this, and during 2017 or so, even 18, I think Nifty Next 50 was a 5-star rated so-called large cap fund, which is not true. But then that's how people started investing in it. And I believe the recent increase in interest over index funds is because of this pretty temporary phenomena where they think that where investors believe that if they choose index funds, they will always be able to beat all the large cap funds. That's not true. There's always going to be some large cap actively managed large cap funds that's going to beat your index and beat your index in a fund. But that's something, the whole point of index investing, like I always said, is that what large cap funds are those and what large cap funds will always keep beating the index, nobody can say. And I don't think there's any one actively managed large cap fund that will continue to beat an index. So that is the reason why you should be in index investing, rather than saying, okay, I'm because I believe over the long term all these actively managed funds will underperform, I'm going to be in the index. That kind of mindset is behaviorally wrong. It's not the right way to start index investing. Now I'm getting ahead of myself. I'll talk about the study. So 27 active large cap funds were taken, and these are the 27. You can head over to the article and find out. And so out of these 27, 22 of them, 81%, bet the Nifty and Nifty 100 over the last 7 years with respect to May 15, 2020. And again, the same number of funds, not the same funds, but the same number of funds bet the Nifty over the last 1 year, again 81%. So you can see 81% here over 7 years. 70% of funds outperformed over 6 years. It fell down to 50% over 5 years, 35, 30, 34, 33% over 4 years. Again, more or less the same over 3 years. It shot up to 55% over 2 years, and again 81% over the last 1 year. So you can see that reversal in the trend because of the, like I said, that the market crash has destroyed that inhomogeneity to some extent at least, and you can see that reversal happening. Now, this does not mean that active large cap funds are back and so on. That's not the point here. You must understand that I had talked about a study in which only 5 large cap funds had comfortably bet Nifty 100 in December 2018, and that was a much more thorough study based on rolling returns. So using the same criterion which I used in that study, there is beating the index 70% of the times, 70% of the durations considered over 3 years, 5 years, and 7 years. Only 3 funds, you get only 3 funds using the May 2020 mutual fund screener. So you may argue maybe this is because of the inhomogeneity and so on. So I did another study where I studied regular large cap funds from April 2006 to December 2017, before all these problems of homogeneity and so on. Only 9 out of 22 funds consistently bet the Nifty 100 TRI over 3, 5, and 7 and 10 years respectively. So 70% of outperformance consistency. If I demand that, only 9 out of 22 funds were able to get filtered out. So this is all. So this is your. I mean, I'm not trying to say active large cap funds are back. Active large cap funds have always found it difficult to beat the benchmark. It's just that the market inhomogeneity make it so much more prominent that you saw it in the star rating, and even a layman could easily pick it out. But that has now changed over the last 1 year. So if you have started index investing, please continue index investing. Just don't expect your funds to beat every other fund. There is always going to be some statistics like this. There's always going to be some S Bank moving out of the index, some Vedanta moving out of the index. Stop confusing yourself over all this. You have chosen an index fund, just get on with it. I mean, if you just get disturbed by all this, then it's not the right way to invest in index funds. That's something I made in a video as well. The real reason why you should invest in index funds. So that's what I want to say in this video. Catch you later. Bye bye.